Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risk. I will start with my prediction. I believe ARM will outperform the market over the next 5 years. Let's jump in. Today we're going to look at ARM Holdings, the chip designer powering 99% of smartphones. And unlike typical chip companies, ARM doesn't build the chips itself. It provides fundamental chip designs to other companies and earns money two ways: upfront licensing fees and per chip royalty. Essentially, ARM gets a small cut from each device that uses its intellectual property. This asset-light approach yields high profit margins and massive scale. Now, ARM has various growth opportunities, especially as it's pushing into data centers, PCs, and more. In cloud servers, ARM-based processors are gaining ground because they're more power efficient than traditional chips. ARM even expects to capture around 50% of data center CPU sales by 2025 as cloud giants look to save energy in AI computing. Most of the Mag 7s are already designing ARM-powered server chips, and NVIDIA's latest AI supercomputers pairs its GPUs with ARM-based CPUs for better efficiency. ARM is also expanding into personal computers. Apple's M-series Macs built on ARM architecture show these chips can rival Intel and AMD's performance. And now Windows PC makers and Qualcomm are developing ARM-based chips for laptops. In short, ARM's footprint is extending from your phone to your data center and your PC. All these new arenas could significantly boost ARM's growth beyond the smartphone market. Now, there is risk, and ARM stock comes with a sky-high valuation, and the stock trades around 50 times forward earnings, pricing in a lot of future success. And any disappointment could hurt the stock, so investors should brace for a bumpy ride. Competition is another concern. In servers and PCs, Intel and AMD have decades of dominance and software optimized for their chips, which make it challenging for ARM to break in quickly. Meanwhile, RISC-V, an open-source chip architecture, is rising as a threat. It's royalty-free and highly customizable, so it could tempt some companies to bypass ARM. In fact, there are some big tech players already exploring RISC-V for future chips. Now, my prediction. Despite those risks, I am bullish on ARM's prospect over the next 5 years. I expect ARM's stock to deliver roughly 15% annualized return, which could mean about doubling by 2030. That should beat the market's average and likely outpace some of its competitors. So, quick recap. ARM's model is it licenses chips designed to other companies and earn royalties on each chip sold, which is asset light and has a high margin approach. Next, growth potential. ARM is expanding beyond phones into servers, AI hardware, and PCs. The risk: the stock is expensive and volatile, and ARM faces competition from x86 players and open source RISC-V chips. Now, my 5-year prediction: 15% yearly return, doubling in the next 5 years. At The Motley Fool, your comments make us all smarter. Please comment with your own research and insight about ARM and tell us what stock you want to see Crunch Time tackle next. Go to fool.com/invest to receive the top 10 best stocks to buy now.